Hello and welcome. You're watching KYC. I'm Harsh Patel. With me is Varsha Chandani, and we're going to talk about a company which has done 30% or given a 30% return over the last two trading sessions. Of course, today it's down 6%. So that's still a very healthy 25% return all through this week. We're talking about HLE Glasscoat, and it's on the back of an acquisition which they've done. But they had done this back on the 14th or the 15th of August, if I recall right. So it's quite a few days back. But the stock has been on a tear since that point. Omeras is what the acquisition is that we're talking about. Now, it's a company which gives presence or a footprint to HLE Glasscoat in Europe, or a larger footprint, if I can call it. Now, what I want to know from this Omeras transaction is, what do you expect from an Omeras in terms of top line, margins and bottom line? It's a loss-making company. It's a company which is in equivalence in an IBC situation or a bankruptcy situation in Europe, which HLE Glasscoat has acquired. It's a 270 odd crore rupee acquisition which HLE Glasscoat has done, and HLE Glasscoat itself is around a 3,400 crore market cap company. So it's a decently large kind of acquisition for the kind of size that HLE Glasscoat is. And therefore, the second piece I want to understand is, how are they funding the acquisition, and whether any further capex on Omeras is required or not. Mind you, Omeras' top line in 2024 shrank versus the earlier years, and it's actually a loss-making entity there. So I want to understand whether there is any change to the way they are doing business, and what will that likely change be. In terms of any other additional capex required also will start to hurt the balance sheet, because they've got a reasonably sized debt already sitting on the balance sheet, which they were planning to pay back. But this transaction may well change the metrics. So a lot of those guidances may change, and I'd want to know all of that. How does the acquisition aid the existing business? Mind you, this gives tailwind to the existing business as well. You have a footprint in Europe. Not only does this add to the product arsenal in terms of new products, but the existing products in terms of selling it to Omeras' existing customers. Those will get added very well to an HLE Glasscoat, and that may aid the top line. The top line guidance is roughly late teens, so an inch up there on the existing business, I'm saying, any inch up there would be an indication that that is being contributed by Omeras to a certain extent, and I'd want to know that, because that will also be a lever for future growth. Now, in terms of, therefore, the target top line and PAT margin for FY26 and 27, and this is on a consolidated basis, I'd want to understand the current business plus Omeras, how is this shaping up? Because they had given certain guidances, and we'll put it out, but does that at all change for an HLE Glasscoat, a stock which has run up 25% this week, and therefore all of this will become relevant. In terms of the late teens growth on the existing business, what is it being driven by? Because this has been a key overhang, especially in the businesses in which they supply their products. They haven't really seen that kind of growth, so I'd want to know and understand whether specialty chemicals in terms of a business is picking up or not, because that will hold the key. Then there's the filtration and drying business. In that business, the pickup was expected in FY26. I'm trying to understand whether they're already seeing signs of that, because that will aid both top line as well as margins. Last off, they were planning also to cater to the defense space. Are orders coming in, and what's the outlook of that? So plenty to discuss, and that's probably all that I want to know. But Varsha, I'll toss it to you with regard to explaining to viewers all about the company.
Yeah, thank you for that. HLE Glasscoat. So what it does is they manufacture glass line equipment, filters and dryers equipment for various industries. So be it chemical industry, pharma industry, So talking about the business segment, let us start with filtration and drying division, which contributes almost 40% to the overall revenue, and glass line equipment division, if you see, contributes almost 46%. Now, what are the uses of this glass lined equipment? If I were to talk about, they are used in chemical manufacturing for highly corrosive reaction. They are also used in pharma. To maintain product purity and prevent contamination. Also used in agrochemicals and pesticides and specialty chemicals. The third business segment that they have is heat exchange equipment, which contributes almost 13% to the overall revenue as of Q1 FY26. Over here you have shell, tube or plate transfers heat, which is used in the chemical process. So basically they manufacture in a very easy language, they manufacture certain equipments, glass line equipments, which are used in your agrochemicals, in the specialty chemicals and in pharma segment.
I'll just pause or just interrupt you here for 1 minute. First one, with regard to your filtration and drying equipment, just trying to probably ease it up for viewers. It's basically a filter which allows the separation of solid and liquid post a process. So that equipment is the filtration and drying equipment which allows that separation. So that's on the filtration and drying piece. On heat transfer equipment, it basically transfers heat in chemical processes which is required. A portion of this business comes from Kinam Specialty. That's another acquisition that they had made in 2024. Some of the guidances of Kinam have turned out to be okay, not up to absolute scratch, and that is the other piece which will likely drive numbers as well going forward if that were to play out. Of course, the glass lining equipment, I believe Varsha covered, but it's basically corrosion resistant vessels and largely used in chemical pharma processes and in the manufacturing of API and pharma. So a lot of that is linked to the chemical and the pharmaceutical business. If the chemical business does well, the HLE Glasscoat business will do well. If not, then you will see a drag with regard to business. So very, very linked with regard to the chemical business. Sorry, Varsha, please go ahead.
Sure. I was just speaking about the revenue mix. Then moving on, let's see, 68% of revenue comes from India and rest comes from international business. So you have, mainly Europe, US, wherein 32% of the business comes. This is just the revenue breakup. For example, from for API and pharma, so 65% of their business is coming from API and pharma, 23% from specialty chemicals, 4% from agrochemicals and 8% from others. So if something happens in pharma industry or specialty chemical industries, that's going to affect them, and that really happened. If you see in the last 3 years, we'll of course speak in income statement, the growth has not been that fantastic because of the slowdown that was seen in the specialty chemical segment, and which management has also highlighted in their con call. Well, moving on, let's talk about order book detail, because this is important. This gives us a revenue visibility for the future quarter. So order book as of June 25 stand at around 738 crore, and this gives a revenue visibility of 8 months for international business and 6 months for India business. So they have quite a good order book which will take care of the future quarters. Now
but broadly this is normal,
yes.
Viewers. So if you feel that this is something which is low, not really. It's fairly normal in their line of business to have this kind of revenue visibility. Sorry, Varsha, please go ahead.
Then talking about clients, who are the clients for this company? You have Bayer, you have UPL, Sun Pharma, Atul, BASF. So mostly chemical and pharma companies and agrochemicals companies are their clients. You have PI Industries, SRF, Zydus and Sanofi, who are the clients for this company. Now, the important segment of this company is Omeras acquisition, which Harsh was speaking about. So they've acquired Omeras assets, so Omeras is into glass lined tanks, facade cladding and animal panels. So basically what HLE does is similar kind of business this Omeras has. And so what is in business for HLE Glasscoat? If I were to talk about this, there's an immediate diversification to infrastructure, renewables, and opportunity to cross sell. So now see. So we all know that chemical sector and pharma, so mainly problems in chemical sector has affected HLE Glasscoat. Now because of the diversification into renewables and infrastructure, this overhang will go away. This pressure because of some user industry will go away, and maybe we can see good numbers going forward because of this Omeras acquisition. So basically they've done this acquisition just to diversify their portfolio from chemicals and pharma. And
let's analyze the key metrics now.
Yeah, exactly.
Let's start off with that. We're gonna look at income statement, balance sheet, cash flow, return ratios, shareholding, street cred. There's no street coverage, so we will look at valuations and outlook. And thereafter, we'd speak with the management who will join us very, very shortly. Varsha, 30 seconds, income statement.
So income statement, Harsh, in the last few years, if I were to talk about our net profit, there's been pressure in the net profit. One of the reasons is, of course, higher interest cost and depreciation, and pressure in chemical industry has affected this company. So overall, a neutral rating when it comes to income statement. Because of the industry problem, this company has been going through problems.
Perfect. So numbers on your screen, margins will also come up on a YOY basis. The last 5 years, it's been on a shrinking trend. It's currently at 14%. Let's look at the balance sheet, and you'll see that there is decent amount of borrowing sitting on the balance sheet, both short-term and long-term. You accumulate that, it's nearly 70 to 80% of your equity, your total equity, and therefore may be a bit of a concern. You'll have to wait and watch as to how this plays out, and outlook, of course, we will ask the management. But for the moment, we've given this a neutral, given that it's a 3,500 crore market cap company, and they have relied massively on acquisitions, and therefore it's understandable as to why the debt is slightly on the elevated side. But we'll be cautious here. We've given this a neutral. Cash flow, Varsha.
Yes, moving on to cash flow from cash flow statement, if you see operating cash flow in 23, it was 5 crore to 134 crore. Now, one of the reasons is because of the lower cash, tied up in receivables. So that's a good thing when it comes to cash flow, and that's one of the reasons why we have given, thumbs up. CFO to PAT, if you see, good numbers when it comes to FY25 at 216%. So overall, yes, considering the pressure that the company has gone through, cash flow statement is a good one.
Okay, return ratios, they were elevated above the 20% number, but they've fallen off, and we kind of explained as to why that is so when we discussed the income statement. Largely, this is linked to the income statement. The potential is there to do a 20% ROCE. That is what we are really looking for when we're giving this a neutral, but otherwise a 12 to 13% is what it's clocked over the last couple of years. I'd want to see when this quickly turns around, and that will be linked to profitability as well as pay down of certain amount of debt. So keep your eye out on both of those metrics. Shareholding pattern, Varsha.
Yes, so overall, the one good thing about shareholding pattern is the 66% that the promoter is holding. So good skin in the game. Even FIIs, if you see, they've not decreased their holdings. Again, a good thing. Same goes with DIIs. Even DIIs have increased their holding as of June 25. So overall, a thumbs up when it comes to shareholding pattern.
Also, DSP Small Cap Fund is one of the big investors here. They hold 3.5% stake in this company. So you want to keep your eye out on that one. So that's the other piece regarding shareholding you should know. Street cred, it's done very well over the last month. Over the last 6 months, it's been a doubler. But the last 4 years or 4.5 odd years since listing, it's not given an outstanding return. So we've been cautious here as well. The short term, it's done very, very well. The longer term, it's been a bit of a drag, and that's understandable given the kind of numbers that have played out. And therefore, we've given this a neutral. Let me also try and cover outlook. Now, in terms of the outlook, I'll quickly try and highlight what the goals were for FY26. Growth guidance was high teens. EBITDA target was around 14 to 15%. PAT margin was around 6 to 7% as per guidance. The PAT aspiration is to get to 100 crore in the medium term. The likelihood of that, in case of an 18% top line growth on a 6.5 odd % PAT margin, will be that by FY27 or mid of FY28, you'll have an annualized PAT of 100 crore. Now, in terms, but that changes with Omeras as an acquisition. Order book levers, well, there is traction, both pharma, chemical. There's a ramp up in oil and gas as well. And so some of those are what's aiding the numbers. Of course, there are risks both on the macro front as well as on the raw material front, which HLE Glasscoat is not able to fully pass on to its customers in terms of price hikes. But talk to us about valuations, Varsha. How do those stack up?
Valuation, comparing it with peers, you have GMM Pfaudler. So on TTM basis, pretty much same valuation that the company has. Now, these are on the premium side because of the lower EPS that you are seeing. So, on the neutral side, we'll give when it comes to overall valuation, considering GMM Pfaudler.
Okay, let's therefore stack up all of the ratings. That's how it stacks up. No real thumbs down here. That's the one thing that stands out. But it's been a phenomenal run for the stock. What's the potential here? Like 5 out of 8 on the KYC final rating. Let's go across. We have the whole-time director of HLE Glasscoat, Harsh Patel, joining us. Also, Aalap Patel joining us, who's the ED at HLE Glasscoat. Hello, gentlemen. Welcome. I'm Harsh. With me is Varsha. I want to first start off by understanding, Harsh, from you first. To try and get a sense as to what does the Omeras transaction bring to you in terms of top line and in terms of PAT margin for the full year FY26. Is it going to be a loss-making entity for you where FY26 is concerned? So will it drag your numbers?
Hi, thank you, Harsh, for having me here. Omeras, basically, we acquired the assets of Omeras. The company was not acquired. And also, I just heard your segment. I would like to maybe give my bit. Somebody said on the show that we acquired the company for some 200 crore. The company was not acquired for 200 odd crore. It was acquired for about 2.75 million euros, which is roughly 28 crore at the most. So for us, Omeras is a very, very good acquisition from a valuation point of view. Omeras basically had a top line of about 20 million euros, which is around 200 crore last year. And it had actually turned profit last year. Omeras was on a self-governed bankruptcy. So it's not the bankruptcy in the true sense. So the way it works in Germany is that even if you run out of cash for 1 year, you have to declare bankruptcy. So from the point of view of valuation and from the point of view of top line, we feel this is a very, very good acquisition for us, especially also because it is in the same technology segment that we are present. Omeras will not be a loss-making entity for us in this year. Maybe it will turn only a very small profit. But in 3 or 4 quarters from now, we expect Omeras also to be on a double-digit EBITDA margin business.
I stand corrected, Harsh. That's my error. So yes, Omeras was a 28 crore acquisition. Now, let me talk about the funding of the transaction. Are you going to fund it largely through internal accruals? Shouldn't be a big challenge, right?
Yeah, that is correct. We have a very strong balance sheet and we have enough internal accruals to fund Omeras. And we are not looking to raise debt for this acquisition.
Does the total growth in terms of your FY26 numbers look like, both on, and Aalap, let me come to you with regard to this one, both on the top line as well as on the PAT margin? What's the revised guidance for FY26?
Yeah, so first of all, thanks for having me. When you say revised guidelines, I'm assuming it is on account of acquisition of Omeras.
That is correct. That is correct.
So for FY26, we feel Omeras will get us an additional, let's say about 100 crores worth of top line. And like Harsh said, we will have, a very modest profit in the Omeras business for this financial year. But from next financial year onwards, which is about 3 or 4 quarters from now, we are aspiring to have a double-digit EBITDA there as well.
Right. Thank you for that. Hi gentlemen, Varsha this side. Pleasure to have you on NDTV Profit. Harsh, my question would be to you, because company is also exploring, possibilities of expanding business when it comes to aerospace and defense. Have you seen any kind of orders, or what's the on-ground talks? Have you, done something there? Have you received any order?
Yes, hi Varsha. Yes, we have been working on certain projects on defense. We have made headways on some defense projects. Unfortunately, I may not be able to divulge much details, but yes, we have taken some initial steps in the defense. Of course, everybody knows that 2 years ago we delivered some diving vessels for the Navy, which were then installed in the Nistara vessels, which were then launched from Visakhapatnam. So that is already done. We are continuing to service such more inquiries, but we have also made headways in the army, I mean in the vehicle segment. So you will see some action in future. Right now, I have not much to say there.
Understood. And also, Aalap, coming to you, if you could give us sense on how chemical and pharma sector, especially chemical sector, is evolving, because we know that currently the industry is under pressure. But talking to your clients, are you getting a sense that is there a growth, volume growth, or has pricing pressure settled? Anything on ground reality that you're getting?
Yeah. So as you very rightly said, the chemical sector was struggling to a large extent for the last 6 or 8 quarters. What we are seeing now is that a lot of projects which were on hold for many quarters at a stretch, they are now all coming through. We have finalized quite a bit of these orders which were not moving at all. What we are also seeing is a revival in demand, in the sense that our reliance on a few large inquiries or projects has gone down. So maybe even in months where we don't have any large or very large project orders in the pipeline, we are still meeting or exceeding our revenue booking targets, as is evident from our order book. So to that extent, we are seeing let's say a revival of demand in the chemical sector as well. And as you know, pharma is doing quite well. Pharma is kind of the growth driver for us at the moment, both a demand and a growth driver for us at the moment.
What is the kind of strength in that recovery? Are you seeing extremely strong demand, or are you expecting that? Is that what your customers are telling you? What's the expectation like?
So I think we are definitely seeing an uptick in the demand and the sentiment both. I would still not call it an extremely strong demand.
And what about filtration and drying? That business was expected to do well or pick up well in FY26. Are you seeing green shoots there, Aalap?
Yes, absolutely. Absolutely.
Okay, and is that on course? Is that in line with what you were penciling in when you gave that guidance at the end of Q4 FY26?
Yes, it is very much Yes, it is very much in line with our expectations.
Understood. So, Harsh, you would have penciled in around maybe 16 to 20% kind of growth for FY26 in your existing business. Now that you've acquired Omeras, how much does Omeras contribute to the existing business in terms of opportunity? You get to cross-sell to maybe some of Omeras' clients. How does that add to your top line? And over and above that, of course, you're expecting 100 crore kind of a top line coming in from Omeras as well, so, or Omeras' assets as well. How does that work out? Give us that perspective.
Right. So Omeras is broadly operating in, say, 2 segments. One segment is the architectural facade segment, where there is no real cross-selling or possible. But Omeras also caters to the storage segment. So Omeras manufactures large glass-lined tanks, which at HLE currently we cannot manufacture. It's a different size of tanks that they manufacture. And a lot of our Indian customers, for example, all the customers that you had listed in the pharma and the agrochemical space, they buy such tanks. Currently, there are 2 things. One is currently this demand is serviced by a different kind of tanks, which the tanks that Omeras makes, the glass fused tanks that Omeras can make, can give a better result with. And it can also create more markets where it was not there. So yes, there is cross-selling possible from Omeras to our existing customers.
Right. So if I were to just try and extrapolate the numbers, 1300 crore would be the rough top line for FY26. FY27 would be closer to 1500 crore. Would those assumptions be right? And would you still continue to be constructive with regard to margin? Just yes or no, Aalap. Would a 15% margin be reasonable on that kind of top line number?
Yeah, those kind of numbers would definitely be a good target for us to have, and not unrealistic.
Perfect. Thank you so much, both of you gentlemen, for joining us. We'll let you go on that note. And viewers, that's all the time we have on KYC today. From Varsha, myself, and everyone who puts the show together, thanks so much for watching. Stay with us here on NDTV Profit.